Welcome to Boss Capital channel. My name is Michael Chu. This is a market recap video for the week ending June 13, 2025. I'm going to start off with this spreadsheet here that basically show like what IBD signal is showing right now. They're still pretty much in uptrend mode, allocating pretty high still, 80 to 100%. The problem here is that we have seen lots of distribution days started like now. Technically it's 4 weeks ago, since 4 weeks ago. So for 1 week here, 2 weeks here, 3 weeks here, and now the 4th week, we are seeing basically all the red lines here mean there's a new distribution day added. And this week is quite severe. We have 3 or 5 days with distribution days. Now we have 3 on the Nasdaq and 6 on S&P. So it is getting really high here. And this week we saw, it's kind of weird because the market has been kind of stalling, right? What they call stalling on the index, meaning it's moving upward a little, but on much higher volume. And we'll see that on the chart in a second. But yeah, so that's what happened here on Monday. On Wednesday, we saw some U.S. China trade progress, and also we saw some cooling inflation with the CPI data. But again, the market was stalling again that day. It didn't really move up much on higher volume. And then on Thursday we see a reversal intraday and close week, and then by Friday we have that news from Israel attacking Iran, and then Iran attacking back, and it's still going on over this weekend, and it's really bad right now, obviously over there, and the market tried to recover in the morning, but it couldn't, and it just fell apart by the end of the day. And in terms of accumulation and distribution, we're seeing lots of accumulation going up until Friday. And, even on Friday, we see there's still 170 stocks under accumulation, but finally we have more stocks under distribution here. Same thing with the number of industry groups. On the sector side, we're seeing, again, it turned negative on the technology side. You see now we have net number of accumulations, stocks here. Minus the distribution, we have minus 38. So we have way more distribution and accumulation in the tech sector. Same thing with retail, pretty high numbers here. Industrial, health, commodities are the only one because of oil and gas. And a lot of the other commodity stuff like uranium, gold, and even silver stock, those are doing well. And then financial also got hit. So pretty much most areas got hit by Friday. So that's not a good thing. So let's turn to the chart right now. So here's Nasdaq on the weekly chart. It doesn't look as bad on the weekly, because the bar is kind of not that wide. Like it's a little bit shorter than even previous week's bar. But it did reverse from the top. That is probably the only problem here. And also it closed below last week's, the weeks before, so slightly also below that. Now on the daily chart, it looks a little bit more damaged, and why? So we have seen the pullbacks recently, right? Like from 4 weeks ago. See this pullback, and what happened here? The 10-day, when it went below, this is Nasdaq. When it went below the green line here, and look at where it closed, right? It was like more in the middle range, so it basically bounced back, and then it followed through the next day and gap up, right? Then we have another pullback here, and look at this. It, again, very similar. It bounced back and closed at the top of the range. So that next day it followed through again and continued the run here. Then we have this 1-day pullback, but this pullback is actually above the 10-day. So it wasn't even under the 10-day, and then the next day, look at that, gap up again and bounce back. So now we are seeing this reversal from the top here, so that's negative. And then we follow through, 2 days later with a downside, right? A gap down basically. And then the biggest problem here on the gap down is that it closed below the 10-day, which we haven't done, well, we have done it here, but we haven't actually closed at the bottom of the range. So that is the difference between this one and this one here. And I think it's time to be more cautious. And, we are also seeing like more updates in lower volume and selling days in like much higher volume. So that's another problem. Well, we're seeing the stalling days, which means like not much movement on higher volume as well. So that's another problem, right? That's actually the bigger problem. So from a big picture perspective, we are trying to come back to this 20,000 mark, which is near the previous high. Now we are stalling lately, right? Like I say, all these higher days are coming in much higher volume, but the move is so subtle, like so little. And that's why IBD usually will coin them as like stalling days, and which add to the distribution days. And now in this case, we kind of confirming that, hey, you know what, we're coming back down, and look at how fast it comes back down, and like kind of took away all the gains because those gains were so small. Right, so from those 6 days or run here, their gains were so small that they only took like two down days here to come back to like more than, you know, how many sessions ago, right? Almost 2 weeks ago. So that is the biggest problem right now. Again, as I mentioned earlier, we had, you know, okay news, like, you know, maybe some people don't see it as good news, but like the China and U.S., they kind of agree where they're at right now. And also I think they lift some of the rare earth minerals, you know, restrictions for U.S. So they have some sort of at least short-term 6-month deal or something like that. And then we have lower CPI, also another good news. But again, the market couldn't move on that news. That was Wednesday, and actually reversed. You know, that's very negative. And now we're falling through on Friday with the Iran-Israel news, and then probably going into Monday, we're gonna hear more, you know, missile attack over the weekend, and you know, and then people, you know, are getting injured and maybe even casualties and stuff. That's gonna continue to hurt the market because now Iran is going full force attacking back, and this is gonna, you know, and we will see in a second the oil price already shot up quite a bit. And so this could continue, and that could also lead to further problems with inflation, and that will put, like, you know, we have Fed meeting coming out on Wednesday. So these are all putting a dam on, like, you know, the future prospects of like rate cuts and so forth, right? So yeah, and yeah, so we're seeing like Israel launch a preemptive strike against Iran nuclear facilities, right? And then obviously they respond with lots of counter strikes here. The crude oil is up like 8.3% to 74 barrel. This, you know, very high level now, 74. So that would definitely bring some inflation data back. What else do we see here? Again, we're seeing Fed have to meeting next week, so that's another big thing. So we'll have to watch and see what's going to happen. So now that we've broken the 10-day, unless we bounce back right away, which usually it should if we do see a bounce back, but if we don't, we could easily come down to 21-day right here, and then, you know, test that level, and then after that, if we fail the 21-day, then we are in trouble because we can easily fall back to 200 days. So those are the different levels of support. S&P, it's basically the level where it's struggling right now is 6,000 level. So again, this is a nice round number. A lot of people watch this, pay attention to this. So we were up above it for 3 days, and it looks even really good on Thursday because it was able to bounce back from the reversal. And then Friday, again, it just fell through and not a good sign so far. So again, we have the 21-day here and 50-day, 200-day here. The 50-day is still kind of low, right? It's trying to recover, but it still hasn't recovered yet. So Dow also reversed on the weekly chart. On the daily chart, it looks much more severe. Look at this drop here. So not only it gapped down below the 10-day, and look at where it closed. It's much below the 21-day. So this is also a big sign of weakness because it's definitely performing a lot worse than the other two index, right? Because it cut through both 10 and 21-day. And it barely bounced on the intraday, I think, but even at the end of the day, so like right here, it's pretty much no bounce here. This is not good. So here's Russell chart. It was doing really well. Like it's rising all the way to near the 200-day, and then it just got basically hammered back down very fast as well. So here's on the daily chart, like looking very nice, breakout from this zone, what went up, you know, near the 200-day line, And then look at this reversal on Wednesday and look how fast this has dropped all the way back to the 21-day now. Again, it's not below the 21-day like Dow, but it's pretty close to going below it. So this is pretty negative as well. So we really need to see a bounce right away. If we don't see that bounce, we're probably heading much lower. So this is the innovative IBD 50 ETF. It was doing really well for so many weeks. I think it was like 8 weeks or more, something like that. 9 weeks, yeah. And now we finally see one down week. And it's not the biggest bar, but it is dropping quite a bit here. So we fell below the 10-day. Then basically we now at near the 21-day here. So again, if this continue to fall, we can, like I say, it can. So that's another thing we want to see, is it continue to accelerate, because that's what happened usually. At the beginning, it falls very little, but then it accelerate in, falling in much more prices. So that's something, we don't want to see. And so same thing with the stocks. If your stocks are not only performing like, going down, but it's actually going down a lot faster, those are probably stocks you want to cut right away. Otherwise, they could go down a lot lower. Like say, if we go down to the 200-day or even the 50-day, that's a far away from that. The 10-year yield was actually doing pretty well this week. Like it was pulling back nicely here until Friday, which bounced back because of the global risk on the war, between Israel and Iran. But this is also kind of weird, right? Because you have 4 days of going down, but market didn't really do well, right? So that's kind of interesting. So the US dollar hit like almost like near the lows on Thursday. So I don't know, like, it looks pretty bad, but then Friday, it gapped up pretty strong, but it did close at the bottom of the range. So, it's kind of weird as well, so here's the gap up and then it closed, pretty weak actually. So, I don't know, like it couldn't pass, basically it couldn't pass this, moving average. In general, when US dollar is weaker, it kind of, in most cases, not all industries of those, but especially global companies, kind of like good for the exports and stuff. But anyhow, it is on the downtrend right now. And here's the oil price. The oil price is the one that jumped the most. Like, I mean, this was a nice breakout right here on Wednesday. Again, I questioned this move, and obviously it turns out that it works, right? And of course, the news with the war stuff, like maybe people already saw that coming and kind of bit ahead. But this is a huge move, like it's almost 7%. So we are still far from this breakout zone, the traditional buy point. So, but right now it definitely look extended. But right now, because it's all news driven, this could move either way. Like it could drop 4 or 5% on Monday if things kind of resolve itself, or if there's some good news between like maybe peace talk or something. But otherwise, this could continue as well, right? Like, who knows? This is unprecedented kind of times, when it comes to Iran with the oil supply and all that. And this happened during Russia war too. Like at first it didn't go up right away, but it actually stalled, and then it moved up really much because people realized this war is not stopping anytime soon. So, this could be happening too. So we're not sure, but for sure right now, people are definitely bidding this up pretty fast. So, yeah, gold is also making a move. It's almost near new high right now. Silver has pulled back. It's holding so tight right here. Look at that tightness. So that's unbelievable, right? It's just letting the 10-day to catch up. So this also look very bullish. Again, the Bitcoin ETF, this has fallen as well. It's now near the 21-day, so it doesn't look very good. Again, a lot of growth stocks has been hammered. We'll talk about more growth stocks in my next video. Make sure you follow that. We'll talk about the mega cap stocks later in this video. The Investors Business Daily newspaper, inflation tame, job market cools. Inflation report came in higher than expected, with the core CPI annual gain only nudging a little bit higher. So right here is 2.35%. The 4-week average jobless claims hit the highest since August. So this is kind of a little bit concerning here. And continuing claims is now at new high. So that's also a little bit concerning. So there might be more downside to the jobs numbers going forward. And yeah, but the CPI overall looks pretty tame, right? It's just not moving anywhere at near the 2.35% year over year. So one of the things we're hoping for is that, with the, so I think there's some problem with this chart. This doesn't look like it got updated. So we'll skip this because it's definitely down day on Friday, but here you can see it's positive, right? So yeah, next week we'll have the Fed meeting Tuesday on usually Tuesday, Wednesday, and then we'll have the conference on Wednesday. We have the Empire State Manufacturing Survey coming out on Monday, U.S. retail sales on Tuesday, housing starts on Wednesday, and Thursday the market is closed for Juneteenth holiday. The WinX Semiconductor ETF, we're seeing look pretty good action here, even though it was down week for the market. It did reverse from the top, but it still ended up overall positive. SMH on the daily chart here, what we see is that we saw probably one of the strongest sector here recently. You see how this relative trend line has gone up, and you see how the price also looked very strong slope. Now it has fall back. Now it's still outperforming most index because it's still sitting above the 10-day. Now we do see more negative action on the index. We have to see whether this can still outperform. Sometimes there's a delay in selling the best group, but if this group starts to fall hard, then I think the market will maybe be in trouble, right? So something to watch out. Just like growth stocks, we always watch the best leaders. If they start to fall, usually that's a sign the market is weakening. So this is probably the best group recently, and if they start to fall hard, then this market is going to have a lot more trouble, I think. For NVIDIA, the week doesn't look too bad. It looks kind of flat, right? So which is pretty good again for a down week on the main index. So let's go look at the daily chart here. Also, it just falls slightly near the 10-day. Again, doesn't look too bad at this moment. So this is holding up quite strong. So relative strength line is still near new highs. So we'll see if this can hold as well. Taiwan Semiconductor also running really strong recently. Now it's starting to fall back to 10-day after it got quite extended, right? So here's the 10-day. So this one looks even better than NVIDIA because it's quite above the 10-day. Wago tried to bounce back this week after the earnings down last week. It did go up, and then Friday it was kind of pulled back to the 10-day moving average as well. So another stock to see if it can hold this level right now. Week the IGV, the software iShares software ETF group is holding also very tight here. Here's the recent breakout right here. It hasn't moved much though. That's almost like the index where it didn't move much. And but it is still above the 10-day, and also it kind of been close at the bottom. So let's look at intraday chart here. So here we're going down, and then we bounce back, and then we kind of flip-flop and close, a little bit near the lower bottom range, but at least it didn't close at the bottom range here. If we look back at SMH, we did close at the bottom range here, so that's the difference. Look at the mega cap software. We see Microsoft here broke out recently on a new high, and it moved for a few days, and then Friday we pull back. Again, this is still above the 10-day nicely. Looks pretty strong. Amazon pulled back as well but it was able to close in the middle range, so it's found some support at least. Whether it will continue to find support, we're not sure, but at least it closed near the 10-day. So that looks good too. Here's Meta. Meta continued to pull back to the 10-day. It didn't really bounce. It closed at the bottom range. So again, we'll see if we can hold the 10-day in the coming week. So here's Google. It went down in the morning, but then it come back up, and then before closing near the 10-day. So another stock that's at the 10-day, very interesting. So all these mega caps are just sitting at near the 10-day. If they continue to fall, then probably not a good sign. Apple continues to have trouble this week with the 10-day moving average. There's all the short-term moving averages here, and right now it's starting to make newer low again. So that's not a good sign. Tesla was bouncing back this week with some news about robotaxi that the event will launch live on the June 22nd, and that they're doing pilots right now on the road in Austin. So it's been holding up nicely. You can see even though it made new lows, but it went back and closed near the top range, so that looks pretty good as well. So yeah, it's holding up for sure. And then we see Netflix. Netflix also went back to the 21 day, and then this week it actually, finding support. So not going down much further. And the support at the 21 day here right now just sitting very close to the 10 day, trading very tightly. Looks good as well. So those are, this week's market news and mega cap stock news. Right now, obviously, everything is just on the hold standpoint of view. Whether they'll break their short-term moving average and turn into a bigger downtrend, that's probably the bigger question. Nobody really knows. With the distribution days count so high, unless, usually it will continue. Like the selling will continue because in every selling, what happens is everyone wants to hold on. And then when the selling continues, it just slowly drain like the people who are still holding, and then to see who will give up last. And usually at the end is where it dropped the biggest. And the people who haven't sold yet, those are the ones who usually get punished the most if the market continue to turn bearish. So that's the only problem, right? But right now the mega caps are holding up the index really well. That's what I feel. But again, please follow my next growth stocks video, which will come out pretty soon. We are seeing deterioration significantly in the growth stocks area. So that is a really negative sign. So thank you for watching this video. Hope you guys have a good weekend. Bye bye. And please like and subscribe. Thank you.